All right, ladies and gentlemen, good morning. It is November 25th, 2020, and it is the day before Thanksgiving. So, a lot going on in the market, although it is a holiday week, and so I would expect the rest of the week to be, maybe relatively dull. Who knows? Kind of a strange environment that we're in right now, but as everybody knows, the Dow hit a new all-time high yesterday. Big even number, 30,000. Sounds exciting, right? Pulling back a little bit today. Let's see. Consumer sentiment numbers coming out. Unemployment numbers this morning were a little worse than expected. GDP in the, what was it, the last quarter was up 33%. It's craziness. The numbers, you really nowadays, you got to kind of dig under the surface of the economic numbers to even try and figure. When I see the unemployment numbers come out, you have to, you got to add the pandemic unemployment numbers to the official unemployment numbers and all that, and then I see a bunch of different data. So, yeah, it's kind of crazy. The market basically is fluttering around an all-time high at the same time that unemployment's, somewhere between 13 and 20%, depending on how you want to count it. And there you can see, I got the S&P up. So the S&P didn't really hit an all-time high. Actually, the SPY shows a much better picture because this open. When was this? That was on a Monday on 11/9. Like that little open right there was when I guess Pfizer. We had 2 Mondays in a row where there was positive vaccine news, and so this is, I believe, when Pfizer came out and said that their vaccine was ready and 95% effective, whatever. And so that was like the highest open ever. Interestingly enough, it obviously the close, yeah, I guess it was. No, well, no, it wasn't. I'm sorry. So it was the highest print that ever happened in the S&P, but the close was below the all-time high back here, and so it's tricky stuff, and it's all semantics, of course. Talking about all-time highs. Typically, typically, what you'll see, what I see in the media is they use the closing price, right? So if I turn this into a line chart, but clearly yesterday was the all-time high close in the market. So it's sort of interesting. I go back to that SPX chart, which doesn't, necessarily show the opens. The open on the SPX is always a little sort of off from reality, but and I don't know how they calculate it, to be honest with you. But anyhow, you got this big run up to here, and then you got a pullback, and then you got another bounce with a little bit lower high, and then another pullback, and so that bottom trend line looks pretty good. And then I had connected these highs, so it seems it seems reasonable. Excuse me. It seems reasonable to think that the next move is, and I mean the market could chop around for a while, but seems reasonable to think that the next move, is potentially a pullback into this sort of range here. I mean, you could look at this and it wouldn't surprise me. It wouldn't surprise me if, the symmetry of this chart, and a lot depends on the news flow, right? And the shutdowns and what happens. See, there's a lot of competing forces right now. We could get a little bit of a pullback and then even a move higher into the end of the year. Right now, we're in the strongest period of, seasonally speaking, strongest period of the year. And usually, I mean, it's time to start talking about a year-end rally and a Santa Claus rally and all that. So probably some backing and filling, and Probably some more work, like say in this sort of zone here, 3,500, 3,500, 3,600 area. Some consolidation in that area, and then you could potentially, get a breakout. Although, I saw I saw something the other day on some website that had like a dozen different valuation metrics of the overall stock market, price to sales, price to book, PE rate, forward PEs, trailing P, all that stuff, every like traditional metric that you can think of, and literally like, almost all of them were at extremes. Like in the history of the stock market, like the stock market GDP ratio, which I think is like a Buffett, one of Buffett's old-fashioned indicators, at an all-time high. And so basically, if you step back and look at the big picture, whatever, it clearly seems like clearly seems like valuations are stretched. But as we know, that doesn't, that doesn't always mean anything at any given point in time. However, trying to get, after this big move up and right at the highs here and sort of at the top of this pattern with valuations at all-time highs, it's hard to imagine. I mean, it's hard to imagine that, and the other thing is that sentiment, I mean, geez, if there were, if there were any shorts left, I mean, the shorts play an important part of the market. I used to think that the market was buyers and sellers, right? Buyers and sellers, buyers and sellers. That's what you always hear. But I learned a couple of years ago that shorts are like sort of the third, kind of like the third thing to tip the scales, right? Um, because if there's a lot of shorts in the market, then that's pent up buying, right? It's buying out in the future. People have to cover because you can't hang on to shorts forever. So anyway, when the last short in the market leaves the building and turns out the lights, that just decreases the potential pent up buying out in the future. So I mean, obviously, you can't be bearish with the market going up like this, but you have to wonder how disconnected from the overall economy the stock market can get, and it can, they always say it can remain irrational longer than you can stay solvent. So I don't really try and second guess anything, but I guess you could call me skeptical because I've seen it so many times, right? And it's kind of a weird pattern. These W patterns, taken in isolation, typically a W pattern, and especially a breakout from something that looks similar to a W, is like one of the strongest patterns ever. And I don't care what time frame it's on. I've seen it on a 5-minute chart and a 60-minute chart and all that, and a daily chart. Back in like I think it was like 2015, 2016, the market made a couple of W patterns, and when it broke out of like the left side of it, which would basically sort of back over here, they tend to keep going, and so there's a lot of cross currents. So an overvalued market can get even more overvalued, but it would seem to me that and look at this. I mean, this is basically January right there, right? So be interesting to see what happens. I wanted to look at the VIX just to see. Yeah, VIX. They say if the VIX is over 20, and it's just, I mean, it's just barely over 20, and that's of course as of yesterday, right there. But just pattern of the interesting thing about the VIX is that there's like the big sell off when the market sold off like 40% because of the pandemic, and then you've had a few spikes in the VIX or whatever. But what I was kind of noticing here was that was there's kind of a floor right there, like post. Well, I won't say post pandemic because I mean it's not over, but yeah, there's kind of a floor right there, right? And so the VIX is testing it. So anyway, yeah, it's gonna be real interesting to see what happens. Honestly, I have no idea. Let's look at the Qs here. Qs, interestingly enough, are still working their way in this triangle pattern here. Although up near the highs, of course, right? Up near the highs, but so this is honestly potentially a bullish pattern if it breaks out of here. So I mean, that's the thing about technical analysis is in theory, it's completely objective, right? And so no matter what you think the market should do or whatever, if and it's tough to be completely objective when things don't make sense, right? That makes it if I can move that up a little bit. When things just seem like, the opposite of what you would think makes sense, it's kind of it's kind of weird, but it is what it is. Anyway, you got kind of a W pattern here in the Qs too, but it hasn't really broken out of the pattern. The Dow, right? The Dow's what they made a huge big deal about, and that clearly hit a new all-time high yesterday. So the other interesting thing is that the Russell 2000 also hit a high. I can't go on the daily chart. I can't go all the way back to the previous all-time high, but there it is right there. And that was, I mean, man, we talked about this last week, way back in, the middle of 2018. At some point, this trend line right here, that's a monthly trend line that goes all the way back to the bottom of March of 2009. And I'm tempted to like extend that trend line up just to see, like where it would be if it tagged it again on say the monthly chart, right? And see, this is a log setting, and my trend line's drawn on a regular scale, so I'm not going to extend that now because I took a lot of effort. It's tough to make a monthly trend line accurate on these charts anyway, and so I'm not going to do that now. But anyway, yes, I mean small caps. I mentioned this last week too. Around Thanksgiving, this time of the year is when the small caps in the past have tended to get animal spirits, right? And small caps, man, are they volatile. Um, the big thing recently has been the EV sector, right? Electric cars and some of these stocks. I mean, on day-to-day basis, they're up and down, double-digit percentages. A lot of them just rocketed higher, and well, let's look at like KNDI, right? I mean, this is the kind of stuff that you're seeing on certain charts, and that huge gap open yesterday on a bunch of these, um, probably signaled a short-term top. So there's a whole ton of them, but and then of course Tesla's getting added to the S&P 500. I mean, look at that move. Just incredible. Very, and we've seen these kind of moves before. So, I mean, look at this run up in August. It was kind of floundering around and all of a sudden, man, just ripped higher in a sort of a straight line. It's doing something very similar right now. And so, yeah, it could still have room to run, but at some point you're going to see this too. So, these I won't call this one extremely speculative, but um, in theory, the market cap of Tesla is bigger than every other automaker put together, which just seems crazy. But then again, like I just got done saying, what makes sense isn't a lot of times isn't even remotely connected to what happens in the market, right? Which makes you wonder if we're in a similar sort of environment as like the dot-com bubble. I wonder that all the time. Of course, I've been wondering that for a couple of years because you see like just crazy stuff happening, and you see valuations on, and I don't even want to get into individual names, but so anyway, moving on here, I thought I'd talk a little bit about the market because since the market is had this big run up and is up here and this isn't exactly what you would call the bottom of a swing cycle, right? So the idea of the system, the back end system, is that waits for a market pullback. Well, waits for a pullback in an individual stock, and then when that pullback, comes to an end and the stock reverses and starts to go back up, then we jump on for the ride. And so, you know, back here, after the market had pulled back, so like back, end of October, beginning of November, we had lots of open trade, pending trades, I should say, that triggered in on this run up here. And then, um, during this sort of little consolidation up here near the highs, a bunch of them, had little pullbacks and the trailing stops caught up. And so now we're literally down to just two open trades here, right? So there you go. Zoom, which basically just triggered in the other day, and AMD, which has been open since around the beginning of the month. So let's take a look at AMD first. Um, Neat little pattern here. It's got the whole W pattern going on, right? And so what's cool about this is that back here in September, it had a pretty nice pullback, and then there was a decent swing trade on that bounce, and then it pulled back again, literally to almost to the exact same place, and then bounced again. This bounce, the fill wasn't nearly as good. Was the biggest problem with this, but sort of the nature of the market. So you can see back over here after this pullback, you had some consolidation, and then you got sort of this smooth. Well, I wouldn't say smooth. It was a huge rally, but over here, like it's almost like there's a day missing, because it was that huge gap up, right? It was a big gap up, and then the following day it gapped up. So, but anyway, to compensate for that, obviously we have there's the target based on the trigger price, and then there's the compensation target based on the actual, what would have been the entry price on the fill. And so you can see it's as we speak right now, 87.91. It's close. It's close. It's poking right up there and looking pretty good. Trailing stop, started off down here at $74, came up. There was like this big sort of 2-day pullback here, right? And then after that pullback, this should honestly kind of be over here, because after the pullback, then that stop went just below that low. The system, calculates all that stuff, but it's pretty good at trailing stops. As a matter of fact, it's real good at trailing stops. So anyway, you can see the progression. The stops, it's only moved a few times, but as of right now, it's above the trigger, but this is every now and then you get one that's just kind of, and this is a good example of one that kind of triggered in a sloppy manner, but still working, right? I mean, it's still working, and so even if you got in on the gap, it's looking pretty good too, to be honest with you. I would expect that it's kind of like do or die up here. So in theory, in real life, it wouldn't be a bad idea to have that stop just under yesterday's low. I mean, if you wanted to like really reduce your risk on this particular trade, you could get that stop, just under yesterday's low. And quite frankly, it looks to me like, just sort of based on the pattern here, um, with these sort of higher lows and these reversal days, like these two long range days up, and it looks to me like it basically should not break below yesterday's low. like if it reverses here and comes back down. But then again, I mean, I don't want to talk anybody into anything, because if you just mechanically follow the system, it could potentially like come back down and poke around or whatever and not tag this stop and continue all the way, back up here into the 90s. So you just have to use your judgment on that. So the bigger picture, this is a pretty nice looking pattern, and it has a lot of potential to, like I said, to bust up into the 90s. A lot just depends on, the sector. I think I read somewhere that, and I forget the exact numbers, but the overall market has a certain effect on individual stocks, and then the sector is one of the most important things. Like what sector in the semiconductors, which is a humongous sector, but and then of course the individual stock, right? So there we are. Nice. I mean, AMD's is geez, I remember doing this morning show back when we used to do it 2 or 3 times a week, me and Doug and all that. I remember talking about this stock when it crossed from a dollar something above two. Remember that? That was a long time ago. Let's see if I can figure out where that was on the chart. Oh well, it would have been back here. Yeah, it was like I drew this line down here. I think as I remember back in 2015, and so yeah, I remember this is when we were talking about it. Back then. Geez, I got Well, here's the thing: is that I switch back and forth. I switch back and forth from log to like regular settings. So I mean, it's two totally different pictures, but and so when you draw trend lines and different things, on log scale, it's especially trend lines, it looks a lot different than when you switch to arithmetic. But anyway, long story short, AMD, so far so good. This would be the so far so good be the second decent trade of this. There was a couple more back here too. Well, this was basically the recovery on the recovery watch list. These were the targets. So big move though. All right, and so without further ado, ZM, which has been like one of the hottest stocks of the year, obviously the stay-at-home stock, right? Um, massive run up, and and an extraordinary pullback too. This thing was almost $600, and then it dropped to 360 something. So anyway, if you guys recall, last week we were talking about this. The trigger price was at 440 last week, right? And I explained how the trigger price is going to start off high and then come down and come down, and I had drawn some other stuff on here about the price consolidating at a lower level and then turning up and all that. But the way that the market is these days, you get a move in one direction, and then instead of 2 weeks of consolidation, and then you get a move just in the opposite direction. So that's kind of that's kind of what happened here, and we see that a lot. But I had drawn like just a rudimentary trend line on it last week, and so I actually adjusted it this morning to be just above those two highs. And it's kind of interesting that the entry trigger is like basically right around. And I mean, a stock like this is since it's so expensive. I mean, what is there, like $9 but between these increments here? So, I mean, the scale of the charts is kind of crazy because it's such an expensive stock. But anyways, there you go. So, triggered in. Um, it triggered in here on 1120, right? 1120. And so the following day on 1121, or I'm sorry, well I'm sorry, that was Friday. So on Monday on 1123, the open was 432, and so basically with the trigger at 431, basically it triggered in like, right at the trigger price, right at it. And so that's always kind of cool, when you're actually able to get in right at the trigger price. Not that it really matters that much in the bigger scheme of things, but I think psychologically it's it's it makes you feel a little bit better than like on AMD where you had to like buy it on a gap if you wanted to get in. So anyhow, so that's it. I mean, two open trades. What I haven't drawn on here yet. So there's the initial stop, kind of, basically down around. It's not at the low of the pattern. Like some of these, you'll see the stop at the lowest point of the pattern, or even like down here. But the initial stop on this one started off, and of course that's based on the ATR and all that good stuff. So um, what I wanted to draw on here is the target. So the target on this is 495. Let me see if I can figure out where that is. Oh yeah, right here, 495. And it depends on what the pullback looks like. Just for the fun of it. I mean, since, it's not like I have a big list of open trades to go over here, right? You guys have seen times where, there's 10 open trades in that, and we go all through them and look at them. With two open trades, there's only so much to talk about. I'm going to leave like I did on the stop here, I left the on a stock like this, and I'm not positive of this, this could turn into like, 405.38 for, or whatever for the stop. But as long as there's no, if it's a round number, I might as well just make it a round number, at least at this point right here. So, seems kind of reasonable, right? I mean, that's if you take a bigger sort of step back and zoom out on the chart a little bit, it seems reasonable that you got a nice little trend change here, and that's a reasonable target. So what I wanted to do just for the fun of it is I wanted to draw a fib on here just to get an idea of what kind of bounce that would be. Like what kind of retracement that would be on this sell-off. So, okay, because I mean, it's kind of like an optical illusion. If you didn't have the fib on there, I was about to say, it looks like a little bit more than half, or but not quite. Well, actually, it seems about right, right? So there's like 50% of the sell-off, and of course this gap, kind of creates an optical illusion on the chart, and so drawing a fib on here. So that would be like a 50% bounce from absolute high to low of this particular sell-off here, this particular pullback, I should say, which was a humongous, again, percentage-wise, that was a big, big sell-off, which took it basically back to this was probably earnings back here, if I had to guess, but I'm not positive about that, and I'm pretty sure that this was earnings. Like this gap down here. I didn't really dig into the earnings that much, but I seem to remember that, that they crushed it. But, um, what happens a lot of times, you get a stock that looks like this, you get a little sell off and some profit taken. And then, of course, you throw in the mix that this is like the preeminent stay at home stock, right? And so all that, every time that people think that the pandemic's coming to an end shortly, the stay-at-home stocks get whacked, and then um, there's just so much weird stuff going on. I don't know even how to present the point of view of like the stay-at-home stocks versus the pandemic being over because of the vaccine and all that. We're just gonna have to see how it plays out. Regardless of all that, and so it's a reasonable target. That was the whole point of the Fibonacci, was just kind of seeing, so it's not a 3/4. A lot of times stocks will sell off and then the bounce retraces, between half and three quarters. So 61.8, is always a pretty good target. And so this is just below that. So here's what I thought was really interesting about this pattern here. Let me switch to a different chart. Is so look at the MACD here, like this MACD histogram. So Zoom sold off, sold off, sold off, since mid-October, right? Mid-October for about a month, you had that sell off. And then look at how the MACD, and then look at what's happening right here as it's breaking this trend line, and moving above this black is the 9 EMA, and all of a sudden you got the MACD returning to the zero line and going positive, today as we speak. And so that's kind of and so basically the stock sells off, it gets oversold, and then it starts to turn back up, and that MACD goes positive, and that's it's just it's a really nice pattern. And so now everything about this kind of lines up, it's all connected, right? And so like, I don't really use stochastics. I don't know if I got stochastics on any of these charts. Back in the day, I kind of did. Um, I'd have like I'd have the MACD, the stochastics, and the RSI or whatever, and I got away from using stochastics, but I guarantee if you threw some, standard stochastics on the chart or looked at them, that you'd see that, the stochastics probably got oversold too, and then are crossing to the upside as we speak now. Um, I'm not a huge I like to look at the Bollinger Bands, right? That's what you're seeing here is the Bollinger Bands, just to kind of get an idea of it's just another sort of point of reference. I mean, everything's a reference on the chart, right? So there's the 200-day moving average way down there. So I mean, it came down and tested the Bollinger Band. So anyway, look, this is kind of interesting because there's some resistance on the way to that target. The 50-day moving average, which is the red line, being sort of the primary resistance, I guess you could say. This initial sell-off sold down to the 50-day and then caught a bounce off of it. And then this blue line is by default, the 20-day moving average is right smack in the middle of the Bollinger Bands, right? Which is kind of interesting and so it's like the center line of the Bollinger Bands, which is another kind of cool point of reference. But yeah, it's just kind of interesting how it sold down to the 50-day, the bottom of the Bollinger Bands, and then bounced right to the 20-day, the midpoint, and then earnings came out, and that kind of, as you know, earnings throws everything off. So, um, but anyway, as far as like a new swing trade here, so far so good, right? Um, Triggered in at 431. Here we are at roughly 446. And you know what? On second thought, something I said earlier, earnings are on 11:30 on this. And so that throws when I over here. So that was a Monday. That was a big gap down on the vaccine news, right? That was not earnings. The last earnings was this one over here. And so that like I said at the beginning of the show, the past 2 Mondays in a row, we've had like this blockbuster vaccine news from Pfizer and Moderna that they've got vaccines that are going to end the pandemic, and so that's why the big gap down there. And so anyhow, long story short, earnings are coming out here geez, what day is that? That's on Monday. So it's going to kind of going to throw a monkey wrench into this whole trade plan, and the reason is that we're going to close this ahead of earnings. Here's the thing: is you don't want to, I mean, here's the thing: you could easily see a move like that on earnings, and I don't know where this thing's gonna open and close on Monday, but you could see a move way over the target, or you could see a drop like that, right? Like this thing could gap down to, 360, 380. And so there's no edge, as I always say, in holding over earnings. And so over the next, well, and of course, the market's closed tomorrow and it's only open half a day on Friday. So chances are, that this thing's it's gonna get closed at the open on Monday, and chances are it's gonna be somewhere, in the neighborhood of where it is now. So keep that in mind. Um, and I mean, hey, if you're wanted to, you could hang on to, a couple of shares just for the fun of it or whatever. But for the to standardize the way that we do the system, we don't hold stocks over earnings, right? So this would be one. It's just a crapshoot. It's a crapshoot. So, but on a positive note, you do tend to see there's a decent possibility you'll see like a run up ahead of earnings or whatever. And of course, earnings are coming out after the bell on Monday. And so while the system's going to just close it at the opening price on Monday, you kind of have all day to make a decision on what you'd want to do with this if you were in it. So just for the fun of it, I'd say hanging on to a couple of shares, in case you get that big pop, might be kind of fun. So um, and then of course, it wouldn't hurt too bad if it ends up opening down around these lows. It's tough to say. So, but it'll be fun. It'll be fun to watch and see what it does. Um, it'll be fun to see like what it does leading up into earnings. So, anyhow, I think tomorrow being Thanksgiving, you can go to these pending trades. By the way, for the pending trades, you can see the pending trades here, and so the prices on these for some reason didn't get updated last night. So I would imagine that these triggers are still valid. They may have actually changed a little bit, but I mean here we are. We're right. Tomorrow's Thanksgiving. The market's closed, and then on Friday the market's open for half a day. I believe it closes at 1 o'clock, and so it's a holiday week. So what you could do is you could look through the pending trades there and just see if there's anything that looks good. But I'd probably, here's the thing: if like any of them trigger in, um, if any of them triggered in, I did look at these. I looked at these this morning. I just real quickly, and then I'm gonna wrap this up. I just wanted to look at this one. So last week I was explaining, so I mean it's kind of a nasty looking gap down pattern, but it's like almost like repeating. Look at that pivot low yesterday. So last week the trigger on this was 222, and then as of the close on Monday, that trigger was down here at 203, right? And so that's kind of what I was talking about. I'll just mark that on here so we can and so this, even if this triggers move down to like say 197, it doesn't look like it's in jeopardy of triggering in tomorrow. Well, tomorrow, not tomorrow, but Friday. So anyway, not a huge big deal that the pending trades, that the current price didn't get updated, because if any of them do trigger in, they will be on the triggered today list on Friday morning. And quite frankly, I'd probably on a half trading day on Friday morning. Well, I don't know. I mean, we only have two open trades, so you could probably take a small swing at it. This one's actually kind of setting up to look pretty good, quite frankly. And this was sort of just a mock-up of how it would have triggered in, back over here if there was a trade. But this time, if that price sort of consolidates, down here in the low 190s, and this comes down to the mid 190s and it triggers in, you could get something like this. So there you go. Anyway, this one's kind of interesting. There's a couple other ones on the pending trades that are interesting too, but I'll let you look at those charts. So I hope everyone has a great Thanksgiving, and I appreciate you tuning in. If you didn't catch the whole show, the replay will be available shortly on the same page. So have a great Thanksgiving. I will see you back here